Let's talk Tesla, the car company, not the 80s heavy metal band. But it was a pretty rockin' quarter for Tesla. Record sales, gross margins up above 30%, and the company making changes to its battery technology. Let's talk about it all with Gordon Johnson, CEO and founder of GLJ Research, and Gene Munster, managing partner at Loop. And Gene, I caught you on Fast Money last night, so I want to follow up on something that's a little bit, I'll call it WBI, wonky but important, and that is this battery switch. It's not going to get all the headlines. They're going to a lithium ion phosphate battery, LFP for whatever reason is the acronym, and that's going to be on the lower cost models. It could increase profitability but decrease battery life in the cold. We know you like the numbers for the quarter. Do you like the changes they're making on the internal side?
I do. Brian, I got to say, I'm impressed with your tech savvy, your battery knowledge there. That is exactly right. They're trying to ride that appropriate curve around prices that drive demand. They've seen that really nice. Delivers up 73%. The auto top 5 is down 23%. Try to ride that curve of pricing, yet profitability. And margins inched higher in the quarter. Gross margins, ex-EV credits, were 28.5%. The street was looking for 25%. But how you get there, it's easy to say it. It's hard to do it. What you described with the battery piece is something that they're doing. It is small. It's unspoken, but it is important. It is a differentiator, which keeps Tesla's cars priced at a competitive advantage versus this competition that we've been waiting for a long time. And it has materialized in some countries and not in others.
Well, I guess, and thank you, by the way, for that. And Gordon, I guess there's two ways to look at that, right? Which is they're trying to make the battery technology cheaper, and they're trying to maybe either increase profitability or keep prices steady or maybe decrease prices in terms of competition. I would severely doubt the second part of that is going to be Tesla's strategy going forward. The numbers were good, but you say they simply still are not good enough to justify a valuation.
Yeah, we don't think the numbers are good. Their revenue number missed consensus, 13.7 versus 13.9, and the whisper on the bottom line was $2. They came in below that. So I don't know what everybody's talking about. But we need to take a step back. Look, you need to look at what's going on here. Tesla in the quarter and their other segments, right? The reason why Tesla's valued at $800 billion versus $80 million for GM is because they're, quote unquote, more than an auto company. And their other segments, and their energy and storage segment, their gross margin was zero. They're continuing to hemorrhage money there. They're not a utility company, and their services and other, their gross margin was negative 2%. You look at what's going on, right? You got to stop looking at percentages and look at actual unit growth. Unit growth in the quarter was 40,000 units. Tesla sold 241,000 cars. In the second quarter, Toyota sold 2.7 million. VW sold 2.4 million. GM sold 1.7 million cars. Tesla in the third quarter sold 241,000 cars. So their unit growth is not anywhere near sufficient to match their valuation. And when you look at their market share, in China, their share has went from 23% to 11%. In Europe, their share has went from 33% to 12%, where you have real competition. And even in the U.S., where you don't have competition, their market share has went from 82% to 66% first half last year to first half this year. So when you see competition come in, they're losing market share. Their unit growth is slowing significantly. We think they can get to maybe 1.5 million cars sold next year. But going significantly beyond that, we think is going to prove difficult. And you have a plethora of competition coming in 2022. Tesla has no new cars in 2022. They pushed everything out because the 4680 battery cell structure isn't available. So when you look at all that, you also consider their guiding gross margins.
Gordon, that's why they're making the changes on the battery. That's the exact point that I just tried to make. They're making that changes on the battery because it's easier to source. It is cheaper. One of the downsides may be that you might lose some range, particularly in the cold weather. But you know by now, Gordon, as well as anybody, people don't care about this stuff with Tesla. It is a cult in some ways. People who have them, they want another one. Nobody cares about valuations because they view this as Amazon back in 1996.
Can I jump in here,
But
Brian?
they're guiding margins to fall. I'm sorry, was that to me? They're guiding margins. Their CFO said their margins are actually going to fall. So, again, to get to their valuation, they have to scale up to millions of cars sold. To ramp those new factories, margins are going to fall. And by the way, their credit revenue in the third quarter was the lowest since the fourth quarter of 19. So they're not going to have that buffer. So we think there's a margin problem going forward. We don't think they're Amazon. We think they're AOL.
Shepard Smith here. Thanks for watching CNBC on YouTube.